What is up, everybody? Steve here. I hope you're doing well. Happy New Year. I hope the holidays went well for you. In today's video, I want to recap some real estate data and talk about what we are forecasting into 2023. So let's go ahead and just jump into it. Days on market is around 70 compared to a year ago, which is around 49 days on market. I think coming into 2023, we're going to see homes sit on market even longer, maybe even from 3 to 6 months. And I also think the higher end market is going to take much longer to sell, probably a year, maybe a year and a half to sell. We're going to talk a little bit more about the high end market here in a little bit. Median sales prices across all metros in the U.S. according to Redfin topped at $392,000 from June 2022. Ending around $352,000 at the end of December. That's a big swing in property values. Median sales prices as a whole across the U.S. topped at $433,000 in May 2022 and ending in November at $394,000, and coming into December as well, prices continued to be on a decline. Month supply of inventory, this is a big proponent of the real estate market. In January 2022, we had a miserable 1.1 months of supply. In November, we have 2.7 months of supply. And as mentioned in previous videos, I've said that in a healthy market, we should have about 5 to 6 months supply of inventory. So right now, we still have a low level of supply. And I believe that into 2023, that is going to tick back up. And I think we're going to see more and more inventory hit market because of a variety of different reasons. Properties that went off market within 2 weeks. In February 2022, that was 61% of listings, and properties that went off market within a 2-week period, the first 2-week period in November, was about 28%. All right, now let's talk about sales of luxury homes, because I think this market is going to get hit and hit badly depending on the areas. We're already starting to see it in certain areas like Manhattan. Defined as properties that are estimated to be in the top 5% based on market value. They've plummeted by over 38% in a 3-month period ending on November 30th. Compared to the same time 1 year ago, according to Redfin. Price decreases are up 41% this year compared to 20% last year. Again, we're going to see more property decreases, which is going to continue to devalue real estate in many areas. And remember, FOMO, fear of missing out, when we had people just jumping into the market, paying crazy prices, not doing home inspections, not doing any kind of due diligence, paying well above appraised value. Now that same kind of FOMO is going to be more of the fear of keeping a property, the fear of losing equity in a property. And I think that that's going to lead to more inventory hitting market, as well as other factors like job losses and decrease in pay. And unfortunately, the fear for some is not necessarily the losing of equity, but more so being upside down of what they owe compared to where the property values stand when they're ready to sell their property. In 2023, we're not only going to see more inventory come to market, but we're going to see probably more short sales as well as foreclosures. And also, I believe we're going to see more of the contract negotiations take place. There's going to be longer negotiations. We're also going to see a certain level of renegotiations after people have been in contract, whether that's because of an inspection that went and they found certain issues wrong with the property, or flat out people just see that the seller's more motivated and they're going to come back to them and say, look, you know what? We're going to go ahead and move forward with this transaction, but we need another $30,000 off. And I believe that a lot of sellers are going to go for this as well. So we're going to see a lot more of the negotiations, the fundamentals of negotiations take place, as opposed to last year where there were really no negotiations. It was just overpaying for properties. Now, what can we see from real estate agents? I believe we're going to see an exodus of real estate agents getting out of the business. Ones that stay in the business, you're going to see them much more aggressive in terms of mail campaigns, emails coming to you guys, even cold calling. Now, with mortgages coming into 2023, we're going to probably continue to see mortgage applications decline. We're going to see more layoffs in that industry as well. And now mortgage interest rates, it really depends on the Fed if they pivot. According to Market Briefs, which is that newsletter, I'll link it below for you guys if you guys want to sign up for it. January 10th, Powell's going to give a speech on the latest economic data, changes to the Fed's economic outlook, inflation, and the labor market. So are they going to continually to increase the Fed rate because of inflation and the job market? Most likely. But if they do pivot and bring rates down, that could have an effect on mortgage rates as well. So there's a lot of unknown information. January 12th, 2 days later, the CPI report will be released for the last month. This will show if inflation is slowing down. And January 13th, the big banks like Bank of America and JP Morgan will release earnings. Other companies like Delta will report as well. These companies show interesting consumer trends. And in 2023, some investors are going to struggle. The institutional investors that's not part of their business model for long-term appreciation, meaning they're going to hold properties for the long term, and maybe they have floating or adjustable debt. I believe that they may start to liquidate small and larger investors. And so it's just going to really depend on their debt position, whether they're adjustable or not. And also investors that have really tight margins based on rent rates might be in a bad situation as well, both small and large. So if they're relying on a certain rent rate and because of it, there's an influx of rental inventory coming to market, bringing those rent rates down, that could put certain investors into jeopardy into 2023, causing more inventory to hit market. And in 2023, as prices continue to go on a decline in the housing market, I believe we're going to see toward the end of the year more investors come in, more cash investors that have been sitting on the sidelines coming in and making cash offers. And they're probably going to be aggressive in their offers, meaning lower than what the seller is asking. And a lot of these investors are probably going to get really good deals. And unfortunately, that will probably bring down the overall valuation in certain real estate markets as well. And unfortunately, I think we're going to just see more pain in the market for many. And those, which we'll talk about in a second, there's going to be a whole other sector of people who are going to thrive in this market. But pain in the market, we're seeing corporate debt at the highest it's ever been. We're seeing credit card debt at the highest it's ever been as well. I believe we're going to see defaults in both of those. I think we're going to see more bankruptcies as well for corporations as well as individuals. And that's going to cause a lot of opportunity for people who have been smart with money, who have been smart with their credit, who have been smart with not taking on debt that's really bad debt. And people who have just been sitting back, kind of watching and waiting, stacking cash, keeping their credit good. Those people are going to be able to come into the market like yourself and really start to thrive in this market and buy distressed assets, because I think we're going to have a good amount of distressed assets hit market, not just in real estate, but many other classes. And tomorrow I got a video coming out on what I believe is going to happen in terms of wages. I think there's going to be a wage reset. And just seeing in my personal experience, being in some big box stores over the last several weeks, I think something is happening. I'm not quite sure, but I think we're going to see a wage reset, and I'm going to get more into detail in a video tomorrow on that. And I'll see you guys there. I appreciate you guys watching, and I'll see you guys over there tomorrow. Thanks a lot for being here.